During the pandemic, we had an abrupt change to seasonality in housing data. As families were once tightly constrained by school and work, location, and schedules, if a home didn't sell by the end of the summer, you would have missed your window. So in the past, that means you'd start cutting your price to make sure that your home moved before the holidays. Then come Thanksgiving and Christmas, the market slowed, properties get pulled in order to be relisted in January or February. Then last year, all that changed. When families were decoupled from school and work locations, suddenly you can buy and move in December. Inventory then fell, and sellers realized they had far more than expected demand, and they could keep their pricing up. In a lot of American life right now, we're asking ourselves, how permanent are these remote changes? I spoke with a highly successful tech executive friend this week who is looking for her next gig, and she is only talking to firms who are 100% remote. She's not alone. So if these changes are permanent to like how people work and live, do our normal seasonal patterns of buying and selling real estate disappear? Last year, they evaporated. This year, seasonality is back somewhat, but in many ways, the seasonality is changed for maybe forever. So that's some of the things that we'll look at this week in the Altos Research Market Report. Each week, Altos tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and we make that data available to you before you see it in the traditional channels. It is Monday, November 29th. Happy Thanksgiving, everyone. I hope you had a wonderful weekend with friends and family. Here's what the data is telling us right now. There are 375,000 single-family homes on the market at the moment. That's down 2.5% from last week. It does not have the full effect of the Thanksgiving holiday baked into the data yet, so next week will be down some more. Based on the current trends and the fact that it remains true that essentially none of the properties coming out of forbearance, the pandemic mortgage forbearance programs, essentially none of them are being sold. So we can still expect to end the year right around 300,000 single-family homes on the market. This is sort of what looks like a new normal level. There are no signs anywhere of any unusual surge in inventory. So no signs anywhere of any return to the old normal levels yet. So basically, if you own, it's a really good time to keep owning. And people are doing exactly that. So we're going to start 2022 with less available inventory than we started this year. The frenzy of demand is a little less than last year too, but all signs continue to point to low supply, robust demand, and rising prices for the next year. We can see that demand in our immediate sales tracker. About 20,000 homes that got listed this week went into contract essentially immediately. That's a number that's staying remarkably elevated. You can see the overall trend each week continues down, of course, and that will continue into the new year before it rises again. But as a percentage of available inventory, those fast offers, buyers gobbling up of the best homes essentially immediately, that continues unabated. As a result, home prices in the U.S. Are remaining robust. Single-family home price, median price for single-family home in the U.S. this week is $379,900. That's ticking down each week, as is normal for this time of year, as I was saying, seasonal. But home prices are off just 5% from the summer peak, which is less seasonality than normal. because we have stronger demand than normal and of course, critically short supply. So the question is, have we moved into a less seasonal pattern? Lower lows each year? If prices don't fall at the end of the year as much as they used to, what do they do at the beginning of the year? So life has it just so much easier to buy right now than in the old normal times. This seasonality is getting muted. The price of the new listings also ticked down as expected this week to 349,000. That's the light colored line here. Next week, this will drop again as the Thanksgiving holiday weekend is fully baked in. In the light colored line here, you can see that even last year, prices dropped over the holidays. So seasonality exists. It'll be fun to see where the low point of this leading indicator lands and how quickly it rises in January. The steep slope of the price of new listings, again, the light colored line here, each January is a very clear signal of where the market is going to head for the year. You can see January of this year had this real steep slope, and with all those immediate eager buyers, they were driving up the price of the new listings each week very steeply. That showed us for 2021 in January how strong the demand was going to be all year long. That's why this is such a powerful leading indicator, and it's going to be fun again to pick up in January. Finally, this week, let's look at price reductions. The percentage of homes on the market that have taken a price cut recently. Price reductions nationally normally is right about a third. 30 to 35% of the homes on the market have cut their prices. As the year progresses, price reductions climb, and you need to cut your price to move the house before the holidays. But once the holidays are upon us, there are fewer new listings. There are more withdrawals, so sellers wait to test the market again in January and February. So the price reductions, the percentage of homes with price reductions actually declines, right? And it starts curving back down. And so when I say that there's less seasonality than normal, this is one place you could see it. On the one hand, we're back into a seasonal cycle. Price reductions have peaked and are falling. On the other hand, reductions peaked way below where they normally do. So if houses sell over the holidays, there's no need to cut your prices. This shows us that the start of 2022 will start price reductions in the low 20s, which is yet another confirmation that demand is there for anybody who wants to sell into it. The whole seasonal pattern has just shifted lower in the face of this new normal levels of supply and demand. Okay, that's all the data we have time for this week. These new normal seasonal patterns will make it hard for any of the traditional forecasters to predict where home prices will go in 2022. It'll be fascinating to see who gets it right. Speaking of that, our final webinar of the year will be December 15th, so keep an eye out for that. If you are a professional in the real estate business, you want to make sure that you have your Altos data in your hands every Monday. Go to Altos Research right now and sign up. Join us. There's a link in the description below. Thousands of real estate professionals get to put the data in the hands of their clients every week, so you should be among them and join us. As always, subscribe to the YouTube channel. Happy holidays, everyone. Happy Thanksgiving. Happy Hanukkah. Christmas is right around the corner. Lots to cover before the end of the year. More next week. Thank you.